There are hundreds of patterns out there, but what if I told you that I built my entire career on just a few? In this video, I'm gonna break down 3 patterns that you need to be a profitable trader. These are the exact patterns that I use every single day, and I'll show you how to spot them, trade them, and manage risk on them. Most traders fail because they try to trade everything, and of course it can be so overwhelming. I was there when I first started. I was trading and trying every single one of the patterns, and what happened was I started losing more on commissions. Once I went into my platforms and realized that I was actually over trading and I didn't know what I was doing, I started simplifying to just the patterns that I wanted to learn. And the biggest shift in my trading career came from focusing and simplifying on the high probability setups. And these are the 3 patterns that I focused on early on that allowed me to have success in trading: the panic dip buy, the first green day, and the OTC breakout. Everything else I ignore. So here are some charts that I've traded in the past few years: FNMA, TSMP, OCSE, AMC. These are all stocks that showed very clear panic dip buys, and I'm going to show the charts. So as you can see, FNMA was overextended for a few days, and I was watching for that morning panic dip buy. And you see how none of my entries were before it started to bottom at around 260, which was also a meaningful level in the chart from days prior, which was why I was watching 260s, 250s in the first place. That's when I started to get my first entry, because that's when it started to slow down as well, and it started showing me selling stopping, and it's just started showing me signs that it was probably going to be a reversal at this point. And I ended up buying it, and as you can see, I also sold into strength. But in the case that it went lower than 260, I would have sold, because it can always go lower. Stocks can always go lower, and reversal on the short side as well. Stocks can always go higher. So never underestimate a stock and think to yourself, oh, well, what's the worst thing that can happen? Because the worst thing can always happen. Stocks show patterns and they follow the patterns as well, but there are always the ones that you're going to regret and say, why didn't I cut this earlier? Because the sooner that you cut, the better the entry you're going to get. And it also helps a lot for these stocks to have a lot of volume. If you notice a stock has a panic, but volume starts to fade and the stock just kind of doesn't really bounce and it just sort of dies off, those I'm not interested in. I'm only interested in the ones with the highest volatility. And that's what makes this such a violent strategy. But if done safely and of course with the right risk management, they can be done and they can be a consistent strategy, which is why it worked for me. The first pattern is the panic dip buy, and this is actually my favorite one. I was able to get very comfortable with it, and it just worked for my personality. I kind of just tried these 3 setups, and this one was the one that just felt the most comfortable and natural for me. So when I trade panic dip buys, I am looking for stocks that are overextended on the daily. If you click on the daily chart, you're going to see that it's up a lot of days in a row, and the higher it goes, the more I am interested in. I am looking for stocks that have a lot of volume and also have a lot of eyes on them. I don't want to be the only one interested. I want to see other people talking about the stock as well. It creates a cleaner move the more people that are actually trading it, especially for an OTC stock. Basically what happens with it is when something is so overextended, it creates pressure. Everything that goes up is going to eventually come down. And when it finally pulls back, the move is usually violent and just a very quick. And this works because the move down is an emotional type of selling. It causes a panic. For my entry and exit criteria on these panic dip buys, I'm going to look to see the most overextended move possible, and then a panic dip buy in the morning, that's when I'm going to see it flush. I'm going to start to see it. Ideally, it's going to hold green all of these days on the way up, and then on the first day that it goes down, that's the day that I'm watching it, when it starts to first go red. And I'm not going to buy it right away. No, I'm going to give it some time, because I'm not going to catch a falling knife and then what's going to happen? Well, maybe the bottom isn't coming. Like, it could keep going down and down and down, and then what's going to happen is if I buy right away, then it might just keep going down, and I'll eventually be holding something that I'm not interested in. And I could get into serious trouble if it just keeps going down another 10, 20, 30%, because that is what happens with these stocks. They'll go down 10, 20, 30, 40, sometimes even 50%. And what happens if you're holding it from higher? You're gonna get in a lot of trouble. So I am gonna wait for it to flush. I'm gonna give it some time, just sit back and watch it all unfold. This is getting a little crazy, and then I start to see some support from previous day getting nearby. I'm gonna watch to see how it reacts around there. If I start to see it bottoming, that means stalling, or selling stops down a bit, or the bids start to get a little stronger, that's when I would be interested to place my first buy. Once you understand that the bottom truly is in, that's when I can add and add and add, and then I can start selling, because usually if it's such a strong drop in the beginning, it's going to be probably a bounce of 10-15% in just a few seconds. And that's why those were my favorite, because I didn't have to be in them for too long. And that's why I just kind of resonated with them, because it was so easy to take those consistent gains. And for my risk, I noticed where the bottom was. And the only reason I added was once it set the bottom. That is the safe way to do it. If for some reason the bottom is not holding and I just see it so weak and the bids start and you start to lose bids and it just doesn't look that strong, that's when I'm gonna be like, that doesn't look very good. So I'm gonna get out as soon as possible, because these are so quick and violent that sometimes when you don't get out quick enough, it just drops immediately 10, 15, 20%. And now you're like, what do I do now? So the bottom is always gonna be my risk. And I'm also selling into strength every single time. I enter, sell into strength, or plan B is sell if the bottom fails or it starts to get weak on me. For pattern number 2, I'm watching the first green day. So this isn't a panic dip buy, this is a relief bounce day. I look for stocks that have been beaten down on the daily. It's almost like the opposite of a panic dip buy. I'm watching for overextended stocks for the first red day. For the first green day, I'm watching for stocks that have been beaten down and have multiple red days for a first green day. And I am watching for stocks that have been beaten down for like a few days, but still have good volume, have a history of having big moves, so I know that it can do it again. And for stocks that still have eyes on them, not completely off the radar, because that's gonna make these moves a little bit more difficult for me. So what I do with these stocks is I keep them on a separate watch list. Basically, all of the stocks that are running and have eyes on them, have strong volume, and have done big moves in the past, I keep them on a watch list. And I will go scan on these watch lists almost every day and see which ones of these have been beaten down on the daily but are holding. Once they start to hold, I'm looking for triggers. These triggers are the ones that are created when the stock is trading around a range, and that's when I'm gonna get interested. Once the selling has stopped, and now I'm watching to see that bounce. So I have these examples of CDU on January 14th of this year and RXT on February 26th, which I am gonna show you how I traded it and why I was watching it in the first place. They were both down for a few days, but volume returned, and that's when I got interested. And this strategy keeps me out of guessing, and I'm not buying weakness. I'm waiting for strength to show up first. So for RXT, the reason why I'm watching it February 26th, like I said, is because it went from like 2 to 130 and it was down 3 days in a row. So now I'm watching for that reversal. So market open, it was pretty weak, but during the pre-market, it was pretty strong. So that's why I'm interested in seeing where it can hold throughout the day and see where I can get my first entry. So here it's kind of just slowly stopping and it's holding here. So now I'm interested because the selling stopped. So I'm seeing if it can curl back up to high day, which it just did. And this is where I take the entry, just because I noticed that I already have a clear risk on lower day. So it starts to work almost right away. It is a little bit on the slower side, but it's holding every level very well. And so far my risk is not broken. So I keep holding. And this is a little bit of a longer type setup just because it is a little bit on the slower side. It's not just so quick as a panic dip buy where you can just get in and out for 10-15% in just a few minutes. So as you can tell, it's still holding every level, and this is where it starts to speed up. I sell in like the 190s. So how I would identify a breakout. First, I would watch which OTCs have the first initial spike in the morning, and then I'll wait as long as possible. I'll maybe put it on the 15-day, 15-minute, just so I don't feel so like emotionally attached to the 1 day, 1 minute the whole time. Whatever sideways action is holding, once it breaks that trigger, that's when I want to get long, especially if it breaks that with volume. So that would be a part of my entry. For an exit, always selling to strength. I want to be as consistent as possible. I want to take my gains, and I don't want to hold for too long. I just want to take my gains into strength, hold some, maybe a potential next run. Of course, it really just depends on how the market is doing. If all of these OTCs are suddenly running for 1, 2, 3, 4 days, then I guess I might feel comfortable with a swing trade. But if they're not, and this is just a rare occurrence and just one OTC stock is breaking out, then I will sell everything to strength no matter what. If you found this breakout helpful, let me know in the comments which of these 3 patterns you're going to be trying next. And of course, don't forget to subscribe if you want to see more breakdowns or more information for simple, actionable trading strategies.